Today we're taking a look at an alternate version of exercise 1-15 from page 36 of the textbook, chapter 1, Introducing Financial Statements. And in this problem, we're going to take a look at preparing an income statement. So the problem reads that on October the 1st, Ebony Ernst organized Ernst Consulting. On October the 3rd, the owner contributed $83,660 in assets to launch the business. On October the 31st, the company's records show the following items and amounts. Use this information to prepare an October income statement for the business. So we have listed below a smorgasbord of accounts. We see cash, account receivables, office supplies, land, office equipment, accounts payable, and common stock. We also see cash dividends. Then we see consulting revenues and various expenses. Our task is to look at these accounts and decide which accounts and ending balances are necessary to put together the income statement for the business. So first thing, let's put up the blank template for the income statement and fill in a few things. Ernst Consulting, we give it the heading income statement. And notice that the income statement is for a cumulative period. It's for the entire month of October in this case, and so we say that it's ending or for the month ended October 31st. The components of the income statement, we have revenues and expenses, and then at the bottom, net income or net loss. So it's a net income if revenues exceed expenses, and it's a net loss if expenses exceed revenues. Let's go back and look at our accounts and realize that we don't need all of these to put together the income statement. Several of these are items from the balance sheet, so we can get rid of those. We can start off by eliminating the items from the asset side of the balance sheet, get rid of the liability called accounts payable, get rid of the equity account common stock and cash dividends, which will appear later in the statement of retained earnings. And what's left are really the accounts that we need to put together the income statement. Consulting revenues, which is what we're in business for, and the expenses that we incurred to help generate consulting revenues for this particular month of October. So first off, we list the consulting revenues, $13,720. And next up, we list all of the expenses, all of the costs that we incurred during the month of October, their cumulative cost. And all of these costs were necessarily incurred to help generate the revenues for the period. So first off, we have rent expense. We had rent expense of $3,210. We needed to have some facility to locate our offices in so that we could be in business and operate and therefore generate the consulting revenues. And so this expense was necessarily incurred to help generate these revenues for the period. Likewise, we had to pay employees to work during the month because their work efforts helped us to generate what? Revenues for the month. So the employee revenues or salaries expense were $6,690. We had different utility expense, and here we had one that was a telephone expense. We had that bill for $870 for the month. We needed our telephones for the month so that we could talk to customers to help generate our consulting revenues. And then there were some miscellaneous, some kind of catch-all expenses that totaled $680. Next up on the income statement, we just subtotal all the expenses, and here they totaled to $11,450. And then to complete the income statement, we simply subtract the expenses from the revenues and cross our fingers and hope that revenues exceed expenses, because that would be a net income, and here it is. They did exceed, so we have a net income of $2,270. If it's a net loss, if expenses exceed revenues, we simply put that net loss in parentheses. Now we've completed the income statement, so we did our task. Just remember a couple of things. This ending net income or net loss, that'll be carried forward into another financial statement. Do you recall which one? Well, hopefully you said the statement of retained earnings. That ending net income will be transferred into the statement of retained earnings. Net income, well, that's kind of earnings. That's something that we earned. The statement of retained earnings will summarize all of the earnings the company has made that's been kept inside the company. So with this, that completes the first look at our problem on putting together the income statement for Ernst Company.